25-year-old Chen Kai-si has just started her full-time job as a producer with this program, MoneyMind. And while her spending habits haven't changed much from her time as a student, she wants to make the most of what she spends. She's wondering if it makes financial sense to apply for her first credit card.
So after starting my first work, I'm having much more spendings than before, given you need to pay for my own phone bills and also having more eating out during my lunch time. I realized that I'm spending much more and I could potentially be earning some cashbacks or benefits with a credit card, but I just don't know how it works currently.
Her first task? To figure out which credit card could fit her lifestyle. So we sent Kai-si off for a chat with a finance content creator. His first tip? First-timers like her have one key advantage in the credit card market.
So when you sign up for a credit card and you are new to the bank, you actually get a sign-up reward for being, the customer, right? It can be a few $100s in cash, or even like things like a free iPad, free hairdryer, those sort of things. Yeah, and on an ongoing basis, you can actually get rewards like cashback, which is an offset of what you have spent in your statement, or things like credit card miles, where you can actually use them with your airline and redeem free flights. Okay, but of course, if you're someone who can't really control your spending, then perhaps you should think twice about getting a card.
In Singapore, you need to be at least 21 years old to apply for a credit card. There's also a minimum annual income requirement of $30,000.
What are some factors I should look out for when I apply for my credit card?
First, you have to decide whether you're someone who prefer cashback to offset your cost of living, or if you want to earn points and miles for life experiences, right? So once you have that settled, you will then look at cards that fit your spending habits. Because there's no use looking for a card that gives you very high rewards, but you're actually unable to meet the spending requirements of those cards on a monthly basis, and then you have to overspend just to meet those, spending requirements. Yeah, so the first would be decide the kind of rewards that you want, and then the second would be to look for cards that fit in your areas of spend and gives you high rewards for that.
I understand that credit cards charge interest, right? So what happens if I miss my payment this month?
You'll incur the late fee, which is typically about $100. And then you incur 27% per annum interest on the outstanding loan.
This is what the missed payment will add up to. The initial charge, $100. The minimum payment, $50. If you don't pay the minimum amount, you'll incur a late fee of about $100 plus interest. That's at 27% per annum. After just 3 months of non-payment, that original $100 spend compounds to over $300. This continues to snowball until the balance is paid in full. It's not much better if you only make the minimum payment either.
For minimum payment, is actually the amount that you need to pay off your bill to avoid late charges. So for instance, if you have a bill of, let's say, $200, right, your minimum payment would likely be $50. So what some people would do is actually pay off $50 and then they roll the $150 to the next month, right? And doing so, they avoid late charges, but they will still incur interest rate on that $150, right? So the minimum payment is actually not enough. You should actually make your payment in full to avoid both late charges and interest rates.
Such fees and interest payments are not the only requirements you need to manage.
Disadvantages would be that credit cards, the rewards are not given out of the goodness of the bank's hearts, right? So they actually want you to overspend, want you to consume more. So I think that is the number one downside of credit cards. They encourage overconsumption. You have to have the mentality that you are spending your own money, and these are not free money that the bank is giving you to spend, right? And I would say that you should track your expenses so that you know what you're spending on. You can use spreadsheets to track your payment cycles to make sure that you pay your bills on time to avoid all those late charges.
So it's one good hack you would give me when I'm using my credit card.
Aside from the sign-up reward, you should also look at the earn rate of the card, right? Because some cards can give as low as maybe 1.5% rebates, or about 1.4 miles per dollar, whereas there are cards that give as much as 18% to 10 miles per dollar. I think having a credit card actually teaches a young person resource management, right? Because it shows you that if you can wield a financial product effectively, you can actually reap the rewards of it. But if you use it in a poor manner, then you are punished and penalized with things like fees and interest. So I think it really gives young people the idea that, hey, financial products can work in your favor, but it can also work against you.
With so much to consider, Kaisi has decided that she needs to do some homework first before getting her first credit card.
What I'll do now is to monitor my spending habits and understand what are my monthly expenses like to know if a cashback or miles card will be more relevant for myself.